continuing our discussion before, we're still waiting for negotiation between Indonesian and U.S. governments about tariff. And how do you think it will have an impact for investor perspective?
The Trump's administration proposed import tariff could pose challenges, obviously, for not only Indonesia, but every other counterparts that we need to face, I guess, the big boss, the U.S., particularly for us, the key sectors, the export sectors, such as textile, CPO, timber products, and electronics. However, Indonesia's current trade surplus with the U.S. At the same time could also provide some cushions for us to go against these protectionist measures. The Indonesian government has prepared mitigation strategies, like I mentioned earlier a little bit, strengthening bilateral negotiation for the tariff exemption, especially on those strategic products, export market diversification into ASEAN and other FTA counterparts, and I think most of all, on a long-term perspective, I think domestic industrial transformation to increase the value-added products to be readily available for exports. Notably, these tariffs also could, propose a hidden opportunity for Indonesia, as many already discussed. I mean, U.S.-China tension, if it, goes further, I mean, I hope it doesn't, but if it does accelerate, it will accelerate the global supply chain relocation to ASEAN. And we're one of them. Indonesia's one of them, creating new investment opportunities for potentially in manufacturing and supporting industries. And not to mention, this tariff pressure could also accelerate what I just mentioned, the industrial transformation, because that's what I believe the previous governments were intending to do, and I believe the current government also follows suit on that long-term plan. With Indonesia's relatively strong macroeconomic fundamentals, including healthy foreign reserve, a lot healthier than before, and controlled inflation, Indonesia, I believe, has a sufficient capacity to absorb all these external shocks. Of course, however, there's always a however in economics, it seems. This mitigation effectiveness will really depend on the government and also real sector's agility in responding to the increasing complexity of this global trade dynamics.
As we know, our government has many expansive plans and also had budget efficiency. How do you see about that?
Okay, I mean, while the GDP growth is inevitably projected to be lower this year compared to the last, and probably as long as we can remember, Indonesia's economic fundamental, again, remains relatively solid and resilient, supported by key factors. I mean, those governments' plans is in line to their efforts to boost consumption through fiscal stimulus and social assistance programs that will help and sustain the domestic demands. And rising commodity price are benefiting the state revenue and the trade balance, given Indonesia being the commodity-driven economy. Yes, recently that despite the recent downtrend, if you look at most of the commodity prices on a YY basis, it's still staying high. So I think that will help. And the controlled depreciation of rupiah could enhance the export competitiveness in the longer run. On the other hand, yes, you mentioned the large government financing needs for infrastructure, energy subsidies, and industrial transformation may pressure the fiscal deficit. However, please remember that Indonesia still have a very manageable debt to GDP ratio around 40%, whereas I think many of the developed nations have over 100% debt. And the source of financing is mostly domestic bond-denominated financing structure. And therefore, this macroeconomic imbalance risk, I think, shall be maintained quite well and well contained.
How do you see it will affect to the brokerage business in Indonesia?
Oh, the brokerage business. I think we went from macro to micro all of a sudden. Maybe I can share a little bit about our strategy in these difficult times. Facing such global uncertainty, we cannot complain about the conditions. All we can do is taking this opportunity in the right way. And for us, we want to highlight the importance of rightful investments. The latest turmoil that we have experienced from the index point of view was during COVID. And fortunately, we have seen a radical improvement on the participations in the capital market. However, it was even more sad to see and unfortunate to see that the majority of those participants who are 30 or below, so we call it Gen Z or MZ, they end up following rather not so fundamental approach in making their investment decisions, following trends and following, I wouldn't say wrong, but following the trend, approach and trend, picks, that ended up them, losing and ended up making them to exit from the market. So thus, we would like to focus restoring those retail investors' knowledge and confidence by providing and putting more emphasis on education and friendly platform. With a special note that we just last week launched a much improved and easy to use mobile trading system called IKC. This is just one of the actions that we have taken, but all in all, we wouldn't like to only focus on the inclusion only, but this inclusion has to be followed by education, which is the key. So with this in mind, our second strategy is to enhance the margin facility, margin balance in our side, but by providing a channel or a line of leveraging, especially for those fundamental large cap names. It gives me a great joy to realize, especially for the past 6 months, a lot of the investors now finally looking into those value stocks, large cap stocks, some destination that actually proposes value. I mean, because of the deep, correction, but at least I think it gives the regular, retail investors an opportunity to look back on their habits and their approach on their investments. And that's why we want to give a very meritable a facility where they can use a very cheap, low interest, 8.8% margin promotion to utilize and use this line to maximize their profit on rightful investments. And just to follow up on what we like, I guess, that's what people would be asking. We identify potential overweight sector, including the bankings, which will be benefiting from the potential rate cuts we've discussed previously, and credit growth. We like the poultry and consumer staples, which demonstrates the resilience of economic volatility as essential goods. And we have to touch a little bit on gold, just to hedge against the market volatility over the shorter term. However, on the other hand, we see the underweight sector, including cements. We see potential underweight, we see a potential vulnerability in slowdown on infrastructure investments. We also underweight the coal and oil and gas, facing volatility of the global commodity price going down a little bit as of late. And also, we believe the property sector, which is sensitive to the rising cost and weaker consumer purchasing power, is going to be a bit of a not favored sector.
And how do you see about the IPO trends for the rest 2025?
For the rest 2025, we have seen a significant slowdown last year. And I think we are, and the regulators are moving to a very right direction, making sure to enhance the capability of the listed stock, to be listed stocks, making sure that from the regulator's perspective, securing and basically mitigating the risk that will be handed down to the retail investors in the market. For this year, I really hope, because we also do have investment banking divisions on the ECM division, I cannot say it's going to be more active or not active, but I believe in terms of direction from the regulatory bodies, it's moving into the right direction. I think I know why you're asking. There's an exciting IPO coming up. Dear investors, IPO, yes, it's a great opportunity. And Usually, those companies who are looking to list, of course, they need to offer attractive valuation in order for them to secure the funding or financing for their future growth. But please be aware that from the start, you have to look at the fundamental, you have to look at the growth of the company in order to, before making a decision, rather than following what others says. You need to subscribe this or not. So I'm sorry I couldn't answer it in a complete sense, but I think at least this listing market, which was a hot issue last year, is actually settling down very well.